Hey guys, I'm doing some upgrades to some of the videos on the Peter Leeds Academy. And this is a video that I added after the Academy was done. So it's not part of the actual course, but it's just a video that I thought I could share with you as well for free right now because it explains the way that a trade actually takes place, the anatomy about how a stock gets bought and sold and at what price and why. So take a look at this. I hope you like it. If you're a newer investor or a moderate investor, this will help you understand the anatomy, the ways that trades take place, and why you pay the share price that you pay. Before we get into the course too deeply, I want to make sure that you guys know how a trade takes place. Most of you already know this, and I strongly suggest that you typically go through your stockbroker. You want to know how to trade stocks. They'll give you some learning or tutorial information. There's plenty of stuff online. So you don't need to learn it from me. And I strongly suggest you go through your broker. Sometimes they have different terminology for things. Sometimes if you have a problem with a trade, you're going to go to them, not to me. So I want you guys to base all your trades on learning through your broker, but I'm going to give you a quick summary just to get you up to speed to make sure that you understand the mechanics of how trades take place. And I'm going to super simplify it. The main type of order is a market order. We say, I want to buy 5 shares of IBM. Your broker will go get you 5 shares of IBM at whatever price. But especially with thinly traded stocks, you should always use a limit order. That's where you say, go and buy me 3 shares of IBM, but don't pay more than X dollars per share. Give me 3 or 5 shares of IBM at $200. And then they'll get you shares at $200 or less, or they won't be able to get you any shares because you're not willing to pay enough. It's literally that simple. So I'm going to give you a really clear example here. Picture 10 people trying to buy shares of Microsoft. And of the 10 people, if they're all using, well, any of them using a market order, will instantly go and get those shares purchased for them from their broker at whatever the prevailing price is. But picture 10 people who are trying to buy shares of Microsoft that have a limit order. I'm willing to pay $100 a share. Someone else is saying I'll pay as much as $105 a share. Someone else is saying I'll pay $110 a share. Whoever is willing to pay the most of all the people who have a limit order to buy the shares, whoever is putting out the highest price, they'll be at the front of the line. Think of it that way. And then when someone comes along and says, well, I'm going to sell my shares of Microsoft, and if they say I'll do that in the market order, those shares will just sell to whoever is putting out the highest bid price. If they have a limit order and they say, I'm willing to sell my shares of Microsoft, I'm going to sell them at $80 each or more. What happens then is that those shares will sell to the highest bid and then the second highest bid until all the shares are sold. And remember, especially with thinly traded stocks, sometimes penny stocks, there's not a lot of activity there. You want to make sure to use a limit order because sometimes you might say, I'll just use a market order, give me 10,000 shares of this penny stock. And you wind up paying multiples more than you would have because it's such a thinly traded stock. Whatever your actual act of buying the shares is going to drive the price higher until your order to purchase is exhausted and the shares come back down. So make sure, always use limit orders with thinly traded stocks. And a couple other things I'll tell you quickly. There's a good to close order, which means that the order will be open and active until the close of business or close of the markets that day. And they close at 4 p.m. New York time, most business days. But you can have an order that's open for multiple days at a time. You might say, I would like to buy 5,000 shares of Harley Davidson, for example. And in this discussion, all the numbers I'm telling you, all the companies I'm telling you, they're all just example numbers for use in explaining the concept. But if you say I'll buy 10,000 shares of this company and I'll keep the order open for the next week, what happens is that you get a commission for the trade every day that a trade takes place. So say the first day you get 2,000 shares that you wanted out of 10,000. The next day you get another 3,000 shares. Then on the third day, maybe you get the last 5,000 shares. And there's your 10,000 shares. And you got them all, but you paid 3 different commissions to your broker for those trades. Keep that in mind as we go forward and you start actually trading stocks for real. It's typically best to just make your trade all in one day, assuming you get the share price that you're looking for. And to trade a stock, all you need to know is the name of the company and the ticker symbol and the price of the shares if you're going to be using a limit order. Well, even if you're going to use a market order, you still want to know what is the price of those shares that you're interested in. This is a super simplified overview discussion of how a trade takes place. Please learn more from your broker as well to augment what you know, and understand that you're going to be going through them for the trades. So you're going to have to go to them if there's a problem. They're going to have to explain it to you using their terminology. Remember that everything I'm saying here is it's feeling much more complicated than it needs to be just by the nature of this discussion. It's incredibly simple, and as soon as you know it, you won't even need to think too hard about it again. It'll come to you pretty easily more and more every day, week, and month. And now that you're done with this video, click mark finished below the video, and it'll take you to the next step of the Peter Leeds Academy. So if you want to learn how to figure out the real value of a stock, to find investments that are undervalued, the Peter Leeds Academy is a great way to do that. So if you want to learn more about that, just check it out at peterleeds.com. So until we get to the next video that we're working on right now, we love you guys. We want to help you out as much as we possibly can. And thank you all so much for the wonderful support you guys have been showing us.